Bitcoin is in a position here where we are basically stuck between 19.5 right here and 20.5 over here, and we're in an equilibrium. I want to break this down for you because literally as soon as this isn't holding anymore, we're probably going to be seeing a lot of volatility, and really, if we end up breaking the resistance, there are some nice areas we could be heading up to over here. If we end up breaking the support and dropping down, it could get very, very ugly. So I just want to break down for you what kind of probabilities I'm looking at for both. How likely is it that we break up? How likely is it that we break down? What happens if we do either of those things? You guys know the deal by now if you're watching this YouTube channel. This YouTube channel is not about Bitcoin is going down or definitely going down or definitely going up or whatever. Not at all. Markets are very complex, trading is very difficult, and so our job as as responsible analysts is to assign probabilities to these things and try and just really understand what's going on in the market. So let's first start off with this kind of equilibrium we're stuck in right now. Bitcoin can't seem to punch above this high, can't seem to drop below this low. We're actually consolidating, and depending on how you look at this, we're potentially even narrowing right here. Our floor is definitely getting higher. So that is something that's actually quite nice. I'm very happy to see signs like that right now. It's just giving me a little bit more optimism that actually we might not be totally dead in the water. Fear and greed, for example, we look at the sentiment right here. It's shot, guys. It's so low, down at 21. Not really reflecting it in the longs though. If we look at longs, they just keep piling up. This is the biggest ratio of longs I've ever seen, although actually I'm not looking at the right time frame. One sec, let me look at this on the 24 hours. Still very, very high ratio. We've got 2.4 long positions for every short position on Binance. So the market is still really trying to push the price up. And generally when that happens, especially across platforms like Binance, which is going to be quite retail beginner style traders, generally they're going to be wrong, and this has been one of the biggest driving forces that the market has had in moving down. Pretty much, guys, every time that I've seen the long ratio get this ridiculously weighted in this direction, we have ended up tumbling lower. It's a pretty undeniable correlation up to this point. Some people will still try and deny it. I don't know why, but it is there. However, if we do end up getting this breakout up, then that would mean quite a few significant things. Now, the first thing it would mean is that we'd basically be battling this Ichimoku cloud right here on the 4-hour time frame. You guys know I've been watching this. This is not this is not getting better. The fact that we couldn't break resistance right here has meant that this has developed Ichimoku resistance at the very same level now. So we're gonna have a lot of troubles now. I think we basically ran out of time to break up. If we do end up breaking up now, there's going to be a lot of fighting that Bitcoin is going to have to put up. That's on the 4-hour time frame with the Ichimoku. With our EMA ribbon, we're still battling this resistance. We're still getting rejected from this resistance, ladies and gents. So still weighing on the market. We look at this on the 1-day time frame, and this is rapidly coming down as well. If we do break up, basically all I think we're going to be doing is potentially capturing resistance a little bit higher, because the next key level in this range that I'm actually seeing right here, if we take ourselves back onto the 4-hour time frame, the next key level that I'm seeing right here is going to be just kind of where these rejections came in the market. So let me just stretch out these boxes here, just so that it all looks a little bit nicer. So this kind of area right here, I think, is going to be the next potential danger zone for Bitcoin. This stretching between basically, kind of 21.5 all the way up to 21.8, something around there. It's a small gap, and then yes, of course, if Bitcoin can climb above there, I think it should be fairly easy for Bitcoin to get to the top of this range, to 24s, to 25s, and so on. However, if we do break this, I'm not seeing any support, guys. This range down here, stretching all the way down to kind of like 18.9, 19,000, you could probably call this a support. Honestly, I think this should be tightened a little bit. I think if we do end up dropping below basically our prior swing low right here, this is the 19.5 level that we bounced off from just at the very end of last month in August. I think if we're able to get back down to this level and potentially even lower, that's it. Like, that's going to be game over as far as I'm concerned, because there's so many other bad signs in the market right now. The S&P 500, as I mentioned in the last video, is going to be very important. It did not close nicely. There's still plenty of time. It obviously can still bounce. The S&P 500 doesn't have to move super quickly, but it's not showing the best signs just at the moment, in my opinion. We look at the dollar, still looking really, really good. You know, definitely looking like it could be ready to rally up a little bit more. You know, so I think that's important to be keeping in mind as well. And when we bring this back to Bitcoin right here, you know, we've had a lot of kind of final chances right now, in my opinion. And, you know, at what point are you just going to kind of kick the bucket and just give in and accept defeat? And honestly, I think that level is just going to be swinging below this low. I do not want to see Bitcoin coming back down here. If we do, then yeah, it's a pretty steep drop down to our next area of support, which is going to be this kind of previous low. But you know, and this is still support, so I don't want to get too crazy about it. You know, the fear and greed index is very low. Every fucking analyst and their grandmother is bearish right now. So you know, I mean, I see why. Obviously, the market isn't super nice right now. I can totally understand why people are bearish, but you know, at the same time, I don't like to pile onto these bandwagons, especially when you know, we are in a situation where, you know, we've dropped down by quite a bit. We haven't really seen much relief on this whole drop. You know, is it possible that we get some sort of, you know, nice little uptrend? Perhaps, you know, 22 takes us into the end of September kind of thing. It would make a lot of sense. It's exactly what I think people wouldn't want to see as well. So that's just something that I want to be, you know, making sure that we are keeping in our minds, you know, because I think that's a really, really important thing in this market that people are not paying attention to. Let's move over to Ethereum as well. Ethereum's looking really hot, very, very fun to trade. You guys already know the deal with Phantom. I have been trading Phantom these last days, pulled some very, very big profits on Phantom right here. If you want to see how I was able to pull that off, these are the steps to join VIP on screen right here. And here are some of the posts that I wrote about Phantom, how I just locked in an 80% profit, gave him an update on, you know, how I was targeting 100% profit and beyond, and a little bit more right here. So this trade has been going very well. My stop loss isn't a guaranteed profit as well. I mean, it is a textbook trade. All of this went on inside of VIP, which you can join by following these steps on screen right here. But I'm not going to look at Phantom just now. I actually want to look at Ethereum instead. Ethereum is looking pretty interesting. I want to bring these fib levels to your attention. I've never actually spoken about this publicly. I've known about them for quite a while, but I never really used them. However, I've noticed that people are starting to talk about this now. The 0.33 level complementing the 382 and the 0.66 level complementing the 618. Honestly, these are not life hacks. I don't know why people make such big deals out of them, but you know, these are additional levels on the Fibonacci retracement that right now are gaining a little bit of popularity. I don't want to talk about it too much because I don't actually want this to get too popular. I don't even use it, to be honest with you guys. I don't use it very much. In fact, I've only used the 6.6 and the 3.3 levels maybe twice in this whole year, and I never even included it in any of my analysis because it just wasn't significant enough. But it's something that I want to put on your radar because you know, these kind of things, they can be useful if used in moderation. So do with that what you will. And we do have actually you know, Ethereum kind of battling this resistance area right here with this 382 level, not really quite able to peak up. Still, in my opinion, looking stronger than Bitcoin. And actually, you can see that reflected on the Ethereum against Bitcoin chart right here. So, you know, it's looking pretty decent, guys. You know, that merge is coming up in about 12 days. So, you know, I know a lot of people are kind of getting excited for that and so on. So, you know, there's a few things going on in the space right now, you know, that could be giving this market one kind of last breath of excitement. But I think generally, you know, most people are actually looking at the market just kind of continuing tumbling lower. Now, like I said, I mean, I can totally see why people are saying that. I just don't like jumping on those kind of bandwagons. So I am going to be keeping some distance from that stuff and just making sure that I'm staying, you know, as objective as I can. One of the things that I've actually done to help me achieve that is actually, I'm looking at the weekly time frame. So I'm just trying to find the right chart to show this to you on. And yeah, let's do this right here. Switch it onto the weekly time frame. What I want to show you right here, we are on a Saturday, so this weekly candle hasn't finished yet, but we've got you know, a pretty bearish set of candles right here, guys. I mean, you know, there's no beating around the bush on this one, guys. I mean, it took a fair amount of time for Bitcoin to get from basically you know, where it was from its low to its high, you know, about 28 days and you know, 14 days to erase that progress, right? So not doing too well. And if we look at the candles as well, I mean, this was a bearish engulfing weekly candle. This one weekly candle right here engulfed the past 1 to 3 weeks of trading that came before it. The wick even potentially engulfed the 4th candle, and then the next week of trading, which was last week, just it finished the job, you know. And now we've got, you know, kind of like shooting star type situation where our wick goes very high compared to the candle body. This basically just indicates that within this given time frame, which is 1 week, the price traded all the way up here, it opened all the way down here, it went all the way up here, and now it's back down. You know, so that's generally actually a pretty bearish thing, because it shows us that we tried to fight by moving up, but we couldn't, so we're basically back down to where we started. So you know, that's not really giving me the confidence I want. You know, it's difficult, guys. It's really difficult. It's actually starting to look a little bit reminiscent of what was going on back here, where we kind of mustered a bit of a rally, fucked it all off, and then just fell through the floor, guys. I don't like saying it, but that kind of looks like what Bitcoin could be setting up to do again. And again, really, I don't even think it's a Bitcoin thing. I think this is down to what happens with the dollar. I think this is down to what happens with the S&P 500 and so on. You know, I honestly don't think Bitcoin can has much play in this. You know, this is very much something where we're just kind of at the mercy of the rest of the markets around the world, ladies and gents. I know you don't like hearing it, but guess what? You know, that's kind of one of the reasons that, you know, I'm right about this. You know, this is just how it goes right now. So this is something that I am going to be keeping an eye on. Bottom line, guys, I still maintain my position. We are still at support levels, guys. We are still at support levels. We haven't lost 19.5. We're at lows. People are bearish. You know, everybody's kind of, you know, jumping on that bandwagon right now, guys. I'm just saying, like, I like to be aware of these things. I like to stay very, very curious about these things. Bears are pretty damn cocky right now, ladies and gents. You know, for some reason, these long and shorts, they're not reflecting what I'm saying, but absolutely every other metric, including this one, is showing me that people are very, very scared and upset and worried in this market right now. And I just think that is, you know, something very important to be keeping in mind as we go about trading in these ranges. And speaking of that, guys, I just want to bring this to your attention again. BitGet is offering $8,000 in sign-up bonuses for you to trade on their platform. So this is one of the new platforms I started working with last month. I've known about them for quite a while, and they are good at what they do. I've made an overview video with a tutorial. You can just type in BitGet 4 flies in the YouTube search bar and it will come up. And crucially, guys, they are offering, this is the biggest bonus I've ever seen of any exchange. They are offering you guys $8,000 in bonuses for that's to each of you for signing up using my link in the description, and you'll see the steps to get your cash there. So really, really cool stuff. If you want to take advantage of this, well worth checking out. Bottom line, if you've already got your exchange, guys, and if you don't, you know, if you've already got one, that's great. But if you don't have a backup, you know, in my opinion, you are being financially irresponsible to some extent. We all are a little bit. We're all a little bit lazier than we should be, you know, with our finances, with security and so on. But you know, to set yourself up with a fresh account, which you can test ideas on, or at least just have a backup if your main exchange goes down and so on, I think is always a good idea, whether or not you use BitGet. It's just good practice, guys. You know, there's no limitation on how many accounts you can make with exchanges. Generally, there's no limitations on how many email addresses you can use and so on. So guys, use these tools to your advantage. Give yourself that privacy, give yourself that security and that insurance that if something goes wrong in one place, that your funds are not trapped, or that not all of your funds will be trapped. It's very important to diversify. So there you go, you're getting $8,000 for doing something that you should have already done. So hopefully that is something that interests you, and along with that, VIP as well, if you want to get yourself inside, see exactly what the deal is, be able to watch me trading in real time, see how I pull off that phantom trade and how I'm going to be pulling off trades in the future as well. All of those steps are on screen right now. There is a discount running for you as well, so take advantage of that while it's on the table. Really hope you have enjoyed this video, though. You know what to do if you have. Hit up the likes, subscribe, tick the bell, and I'm out. Bye-bye.